always, guys, this is Prince Dykes here. Market's getting ready to close. Today is November 3rd, Thursday. About 3 or 4 minutes before the market is ready to close. We have GoPro, GPRO, earnings that are getting ready to come out here. I think that a lot of people have purchased the earnings. This is my virtual account, just to trade, to show you guys on my virtual account. I don't like doing too many tutorials on my real account. But anyway, this strategy I'm getting ready to do, I'm going to sell a call and hope that it expires worthless. So for example here, the stock price right now on this particular November 16th call, week 2, let's go with week 2. Week 2, we're going to do 20. All right. Put that market on right here. We want to sell 10. Place order. And we'll log back in tomorrow. See, it's the date, November 3rd, 2016. This is the time right before the market is ready to close. All right. See you guys tomorrow. See how this comes out. All right, guys. I know in the video I said that it was going to be the next day. It's not actually the next day. As you can see, this is November 6th or whatnot. It's Sunday, but because my computer was kind of acting up with the recording and stuff like that, so I couldn't do it Friday. But anyway, besides the point, you guys can see here at the end of the day, I pulled up the analysis here. You can see on the 3rd, like you guys saw earlier, on November 3rd, I purchased, well, I sold the November 2nd week, the November 4th calls, a GoPro, for $1.09 per share. Now keep in mind, there's how many shares in the contract? If you watch my old videos, bam, there you go, 100. It's 100 shares inside of a contract, which means 100 times 1.09 is what? $109. So that means that every contract was $109. I sold 10 of them, which means that I took home, after I paid the $15 commission, I took home $1,074, right? So as soon as I sold them, that went straight into my account. $1,070, a little bit of whatever, $1,074. That's annotating here. Now, the next day, the earnings came out. The earnings were pretty bad. And this would happen to those earnings that the stock dropped off. This is early day when the market opened up. It went down to $10. And then throughout the day, it kind of went up and did something weird. But we're talking about, you know, it went down to $10 the next day. The market, it dropped, and which made the contracts pretty worthless. So they were on the market for the same exact contracts on the market for 13 cents. So what I did was, since I had sold those contracts, I had to go back and buy them to satisfy the people that had purchased them or whatever, right? So what I did, this STO means sell to open. I sold to open on November 3rd, took in a $1,074 profit after commission. On November 4th, the next exact day after the earnings come out, the contract dropped in value. I sold the same exact contract. Well, I brought the same contracts. I'm BTC, buy to close. I brought it to close it. I opened it on November 3rd. I'm closing it. Now I'm buying to close it. If you don't kind of understand the concept of shorting, I have a video on that. What is short selling or whatever the case may be. It'll help you understand the whole process. Or if you don't, just drop a comment below and I'll help you out with understanding that. So pretty much I had to go back to the market and buy what I had just sold because I didn't have it. And pretty much it was I brought them back for $1.45. It was 13 cents per share. I brought them back. That was my loss. So you subtract out of that, you make a $929 profit. Now, this is a very advanced level of trading. This is not something that, if you clicked on this video, you're like, man, you know what? I'm going to do this tomorrow morning. I'm going to open up my account. This is a very, very advanced trading. This is called a naked call. Why is it naked? Selling a naked call? Because I didn't own the shares. I didn't own anything with GoPro. I just sold, right? This is my virtual account. I just sold something that I did not have holdings to, which means that if this stock would have went berserk yesterday, on Friday, went up, I would have had to buy back. I would have had to buy back those stock for that particular price for a loss. So that's why this is a very risky trade. What I did, it worked in my value, in my favor here, because you're selling something that you don't have. And you have a cap on how much you can make, because you take on a profit. You have a cap on how much you can make, but your losses could be unlimited. That's why it sounds crazy. You can only make so much. That was my cap right here, what I could make. But this value here could have been unlimited. Let's say if this stock the next day had went up by, I don't know, 50%, something crazy went up. And these things was back on the market for $3. Guess what? I would have had to purchase those things for $3, making this trade an overall loss, right? Just hypothetically speaking of how it could have went bad. But this is a case of you selling the call and you buying it back to satisfy how you can make a profit. An advanced level of trading that I wanted to give out to you guys. To the next video, don't forget to hit the like, subscribe, comment, and share button. And thank you guys for tuning in. As always, this is Investor Channel. Peace. I'm out.